Boy, yesterday was such a good day for stock investors. It was a glorious day of stocks just going higher. And if you include that some sectors did really well on Monday, it's been a really nice 2 day rise following a terrible week. So I'm hoping that the market keeps going higher. If we look at where stocks are in Asia, Asia is rallying higher, and I think their markets are already closed because they're way ahead. I'm in the US and they're 15 hours ahead of where I live. So it looks like the markets in Asia have closed higher, and the futures look like they're going to trade higher when we open. So it might be a nice 3 day run that we're on, which is really, really nice. I
Price
am
of
joined
crude
by
oil is
Daryl. How you doing,
dropping too.
Daryl?
I'm doing great, Victor. It's good to be here. Hello, everyone.
And you were saying something?
I was just saying that looks like crude is down almost 2.5%.
Saw that. And I think where this is coming from is Iran and the US are beginning to talk. They're going to marriage counseling. I don't think they're married, but you get the kind of analogy. And they're going to promise not to be terrible to one another, and we'll see what they negotiate. But if they get that war or conflict, call it whatever you'd like, kind of put to rest, it's going to make the market far happier. So now the market has been trading lower quite a bit. Did you have anything to share overall on the market? Should I turn my screen over to you?
Sure, if you want to, real quick. The only thing I really wanted to point out is these indexes here on Saturday. I put out a video and I talked that only the S&P 500 had not entered correction territory as of the close on Friday. Every other one of these were down at least 10%. And as of yesterday's close, only one of them is still in correction
And
territory.
that's the
All the other
Nasdaq.
ones, what
The Nasdaq still in correction territory.
Nasdaq Composite. The Nasdaq 100 is barely out. The Nasdaq Composite is sitting at 10.11%. So that was good news as of yesterday's close.
It's what's always gratifying is when you go into sell-offs and you have terrible conditions from a news feed perspective. Oh no, you got ships being fired on as they go to the Strait of Hormuz, and you got tension. The economy isn't like doing great. It's not doing bad. And I buy stocks. I buy stocks under those conditions, knowing that, hey, look, every single time it's paid off. And once again, it's this correction isn't over. For all we know, we go down further. But those that kind of ignore the emotion, ignore the noise, focus for the signal, focus for the data that really should be considered, make good investments. Those investors get ahead, which in my case, I have been buying. I was beginning to run out of cash. My wallet is getting light, but I'm really glad that I bought into a lot of this weakness, a lot of this fear. And I bet a lot of you listening feel the same way if you bought into this sell off and really saw your stocks flourish yesterday. Anything else you want to share on the screen before I
Nope,
pop it
nope,
back?
that's it.
Speaking of yesterday, let's look at this heat map. You better put on some sunglasses, Daryl, because this may be a little too emerald. Look at this, man. And the reason why the indexes moved so much is these big caps moved. Nvidia 5.59, Broadcom 5.5, Google 5%, Meta 6.67. Now Meta's been, man, it's trading like a small cap. it was down last week. I don't know, more than 10%, just last week alone. And then this week, it's just really, really rocking. Palantir up 6%. And this space here on Monday was getting shellacked. The semiconductor materials and components and machinery, these guys were getting shellacked, as well as hardware. And they really bounced back yesterday. Industrials had a real good day. Energy had a bad day. So I bought some more energy stocks. That has been my, insurance policy, small insurance policy. It's not going to cover all damages, but it's been the best trade for me this year. I went into the year thinking energy is probably going to have a good year. It's been a long time coming, and we just needed one catalyst, which was this conflict with Iran and the lower these restrictions on shipping through the Strait of Hormuz. So it's quite a day yesterday. The market really, really bounced up, and it's looking like we are going to open higher again. So we'll see how it goes. Looks like we've got a good number of people on. Good morning, Alex. I hope you're having a nice morning, man. Ricardo, good to see you. Rust Moments. It's been a little while. Good to see your name.
Rust, I thought about you on Monday while we were streaming. We had a young man that's 15 years old that was on our live stream Monday, and it made me think about you. Rust is also a young investor, but very
awesome.
sharp with his analysis and managing his portfolio. Be good to get those two together.
Yeah, that's awesome. That is fantastic. And welcome to the stream. I noted, Ricardo, you got a couple that you'd like to look at. We got a couple of stocks in mind. We're going to start with BWA, and then we're going to look at some of these stocks that really flourished yesterday, like Astera Labs, NVIDIA, Meta. Thought those would be interesting. And there were so many good stocks yesterday. We don't have enough time. All right. So the markets are looking to open higher in about 20 minutes. Oil is under some pressure. I bet you Europe's doing okay. Yep. Europe's doing okay. Crypto up a little bit. Now, crypto it struggled to get north of 70,000 for any period of time. And that'll be interesting to see how that trades. I'm not sure what the catalyst would be for Bitcoin, but we'll see. We'll see. I'll continue to watch it. For me, it's just it's an investment. My cost basis is a good cost basis, so I could just watch it, knowing that I'm way ahead of the game. And then Alex, you're interested. Just checking your pick. Calm. Just reported the earnings. Okay. One thing I wanted to get to before I forget, the stock pick contest. We have a winner, ladies and gentlemen, for the first quarter of 2026. Genetic Smite with his pick of ALM, Almonte, out of Canada. The applause. The crowd goes wild. And it's up 64%. And so he's number one. I'm communicating with Stock Analysis. They were gracious enough to sponsor the contest and provide an annual subscription to the winner. So I'll be setting that up. And congratulations to Genetic Smite. It was a good pick. It's a material stock. It does really, it's been doing great. It's been super volatile because at one point it was above 100% appreciation for 2026, while the market was really struggling because you see a lot of struggling stocks. So congratulations, Genetic Smite. And what I was thinking for the second quarter to keep things interesting is I'll look at the appreciation from April 1st today up until the end of the second quarter. So that way it kind of refreshes everybody's chances, I guess. So I'll be doing that update to this particular Google Sheet that is on the website. And as I update, who's doing what, we will put it out there. Now, Genetic Smite is going to be branded as the guy who won the first quarter. And we'll figure out each quarter, what the prize will be. I haven't thought about that just yet, but once I do, I'll communicate it to everybody. So again, congratulations, Genetic Smite.
Absolutely. That was a good pick.
Yeah. Yep. All right. So we got that squared away. Now let's take a look at BorgWarner. And you want to tell us about BorgWarner? I think this is a stock that you wanted to take a look at.
Well, they're in the auto supply business. They make all kinds of equipment controls and what have you for the automotive industry. The thing that I'm curious about now, with the backlog of turbine production,
Mm-hmm.
they have entered into the turbine production area. And it just makes me wonder if that could be an opportunity or whether they're too late getting into it. I think they're supposed to deliver their first turbines in 2027, so that'd be next year.
Mm-hmm.
I looked on their site and they do have something that looks like a production turbine to me. So makes me wonder if this could be something that could be interesting. It's not something I typically get involved in. It's a consumer discretionary in the auto parts. Some of those can be good plays. They've actually done pretty well over the past year, but just thought we could take a quick look at it and maybe
Yeah.
get some input from anybody else on the stream that's maybe looked at it before.
Okay. Let's take a look. So we kind of have a sense that they're I don't know that I'm going to agree with consumer discretionary, but that's where they're listed. It seems like more of an
Industrial.
industrial stock.
Yeah.
Yeah. So, all right. It's good to know. They're a small cap, 11 billion. And they have a forward P ratio that looks pretty darn attractive at 10.48. And they're priced with a small discount according to analysts over the last year. They've done great. Now, interesting, if you could have bought this stock a really, really good acquisition price back in 2025, doubled your money, boom, doubled your money in, geez, about a year's time. So the stock has rewarded investors that saw that this was an opportunity. If we look at the quarterly, they are beginning to grow their revenue. This is a small growth. They're not the biggest company in the world. They're 14 billion, which is pretty good size. And it's good to see that their revenue is accelerating. Let's look at their margins and see what kind of margins we're going to expect from these guys. They are going to be a lower margin company. Another reason why I don't think they're consumer discretionary. Consumer discretionary tends to have higher margins. Industrials tend to look like this, which is, hey, we have little margin. We're doing business with other businesses, and they won't allow us to have 50% margins. Profits are a little low, so this is not super exciting. This kind of margin profile. It's a business that makes a little bit of money when they sell something. Looking at their forecast, 16 analysts cover it. And let's see here. So we are in this year, 2026. Their earnings per share looks fantastic. It's really exploded, up 311%. Oof. Do you have an idea of why their profits are going up so much?
I haven't looked in that far yet, Victor.
Huh, that looks good. So, and their growth and earnings per share looks really good, and that's what's bringing down that PE ratio. So the PE ratio is nice and low. They're in some categories that should maintain their demand, and the demand looks good. And it looks like, how you were saying that they may get into the turbine business. They expect, or analysts expect, that there will be some growth in the outer years. So that looks good. This looks like a stock that is in good conditions. So let's kick it over to you to look at the charts. I'm going to try to work on a valuation and see where I land on BorgWarner.
Yeah, they've been kind of a steady Eddie over the past year or so. And they did have a big bump on February the 11th. They were up 22%. I tried to find a press release specifically to when they announced they were entering the turbine business. I heard about it just a week or so ago, so it was on a podcast. So maybe this was related to that. I haven't confirmed that. But after that, they had a big black candle or reversal candle here, and they have been drifting back slowly. I can see that 2 days ago they traded below an upward sloping 50, and then yesterday they closed back above that and got above a downward sloping 21 day that just a week or so ago had been rising. They're right at the 50 line. They're in bullish territory. They're sitting at 51 on the RSI. The PPO is still in bearish territory, but looks like we could get a crossover if they can keep their price momentum going. Money flow is still neutral at the moment, and they are above their 200. And there's a lot of stocks that aren't doing that right now. So, and they've been above their 200 for months, almost a year. So anyway, not something I'm going to jump into by any means. I just wanted to take a look at it because they are entering into a product category that does have a backlog. So Caterpillar's into this. Cummins is into this. GE Vernova is into this, and they still have like a 2 or 3 year backlog. So this company is taking that. They've been in auto products forever, electrical equipment and what have you. So I think they have the expertise to move into this without too much problem. But I was just seeing if it was an opportunity, if anyone else thought it was an opportunity, or maybe it's a little bit too late given the 100% rise in their stock price over the past year.
I mean, I understand the story. The story is clear, which is there's incredible demand for new power sources for data centers. So I totally get that. And if the data centers continue to get deployed and there's no interruption to that, I see that, hey, these guys are probably going to do okay. Now, the move that they just experienced might be reason to be a little bit cautious in my book.
Yep.
Like,
Yep.
okay, hold on a second. They just doubled in price.
Yep.
Is it going to keep going? The other things around data center that are just facts out there is OpenAI is beginning to feel a little stressed because they're privately held, and they're like, hey, we're going to spend, I'm not exaggerating, like $1 trillion on data centers. And it's like, really? Hey, you guys really didn't exist 5 years ago. How are you going to spend? How are you going to pay for all that? And that's where it's beginning to get pushback. Like there isn't going to be any capital available. Like lenders are not going to give them the debt they're looking to have. So other businesses like NVIDIA and others that have been investing in OpenAI will bring the capital so that they can build out their data centers. So if that spigot of money capital goes away for OpenAI or CoreWeave or, Oracle's been under a lot of pressure. And then you're going to see, okay, hey, the music's going to stop and it's musical chairs. There's only, let's say, 4 chairs. And if there's 10 players, that means some players are going to be hurting. They're not going to have a lot of revenue. So that's the story. I understand it, and where it goes, we'll see.
Yeah.
Let me kick it over to my screen. Did you have anything else to share?
No, I was just taking a look at the weekly chart. It actually looks a little bit better than the daily chart, but I'll keep an eye on it. Maybe this one will come up again in another stream.
Yeah. I didn't have a valuation on BorgWarner, so let's complete it here. This will be something we do together. Let me look up their free cash flow for the trailing 12 months. And they have $1,180,000,000. Now, I'm going to say that again.
I was making the 1 billion noise from the end of that show.
Like Dr. Evil.
There you go. There you go.
Yeah, I'm a fan of Mike Myers. All right, so these guys, you know what? I'm going to go back to 3 there. This might be a little hot. So let's go to 8. Okay. So right now they are, the data centers continue to get all this investment because some data centers, they've already broke ground and they're not going to abandon that investment. They have to finish it to get some value out of it. So I think the 1 year looks like a year that should grow well. Now let's update cash. What kind of cash do we have on the balance sheet? They've got $2,310,000,000. They've got debt, $4,060,000,000. So based on cash, I mean, this is looking pretty good. This is looking pretty darn good. They generate pretty good amounts of cash. And we looked at that forecast and looked at earnings per share. I'm going to look at the earnings per share for 2026. It's $5.26. They're in a good category. It's going to grow nicely. So I'm going to go up to a growth rate of 9. It looks like it's priced at a discount. It's a small cap. It's not a big cap. So
did you update the shares outstanding?
I don't think I have. Let's take a look. Thank you for calling that out, sir. Because that's going to change things. All right. Look at that. 47, 47, 47. Wow. Okay.
Do you think what about the PE? That seems a bit high to me. Did you adjust that?
That's the PE I want.
Oh,
now,
okay.
If we didn't have all this data center stuff going on, I might go to 12 if they're growing. If they were not growing, I might go lower to 10 or 8. But since they are, hey, we want to play with, GEV, we want to play with Caterpillar, we want to play with, these businesses that want a piece of that energy production feeding these data centers. I think there's probably going to be a good number of investors looking to buy. So the PE ratio that I'm going to go with is 18 on that.
Okay.
Yeah. All right. So it's a good looking stock. Pullback. I would like to see a pullback. And it did experience a pullback here over the last couple of days, I think. Yeah. And it did rise, yesterday, but it was pulling back. Was it enough? Maybe. But that's where I'm at with the stock. For me, it'd be a watch stock. I'm not sold on those margins. I like, larger margins, and this one here, it doesn't have very good margins, so I'd be careful with it. Any other thoughts on
No, I
BorgWarner?
appreciate you taking a look at it.
Yeah, you got it. I'm going to add it to the watch list here because I just want to kind of keep it so that if other investors want to take a peek. And they were consumer discretionary, which we didn't agree with, but oh well. And getting up to about 400 valuations, and advanced members and gold members get access to this. So I wanted to put this on here so they have access to it.
By the way, on Monday, we talked about the markets being closed on Friday. The stock market is closed on Friday. The bond market is open on Friday, but they close early.
Uh-huh.
So the bond market will be able to react to the jobs report. The stock market will have to wait till Monday to react to the jobs market.
And we had an ADP report and
Yes.
a retail report, right? What
Yep.
happened there?
Yep. They reported more jobs. Let me just pull up the website. That way I don't try to do it from memory. I have a good memory. It's just really short. So ADP employment change, they were expecting 40K. They had 63K the last report, and they had 60K. So definitely above expectations. Then the retail sales, they were expecting 0.5%. They got 0.6%. So people are still spending. Year over year, it was 3.7. Previous was 3.2. We don't have an expected value on that. So these are both good reports. I don't know whether we have to take, they're probably not buying more, but what they are buying is more expensive.
Mm-hmm.
That's one way to look at that number. When it bumps up like that, we'll have to look at the details of the report if anybody was really interested in that.
All righty. So, all right. So I updated the BorgWarner. It's listed on the research tab that investors have access to. So we're good to go there. Looks like our market is looking higher. Nice. And well, it's kind of hasn't, it came back to earth a little bit. Gold has been rising. Oil prices, not down as much as they were earlier.
No.
So what's going on?
No.
What is going on? All right, so let's keep going. We had a couple requests, but before we jump into those, let's take a look at Meta, because Meta has been on a wild ride, and they had some action in the courts where they did not win their case. And I think there was 2 cases where the governments, I think state governments, were saying, hey, you got to do more to keep people from being addicted to social and other things too. So things didn't go their way. The stock really sold off. Now the stock really went up yesterday, 6.67%. And this stock has been under pressure over the past year. It's pretty much back to even. And we're comparing this to some pretty crummy times, right? A year ago, we were dealing with the whole tariff, pressure where the, stocks were dealing with the uncertainty around tariffs. Okay, got it. And so this stock has been a little idle. Now, if you buy this stock at the right time, boy, you are a fan of Meta, and I certainly am, because anybody who bought in this range is feeling the pride of buying a good quality business at the right time. All right, so these guys are pretty solid. I mean, if I show you their revenue growth and so forth, what we opened, and this thing opened up 8% higher. Daryl, do I need another cup of coffee, or am I seeing the numbers correctly here?
I'm seeing mine just updated. I'm up 1.1%. Let me
maybe my computer. There we go. There we go. Okay, that's a little more sensible. Stock analysis was getting me overly excited there. All right, so this is a big business. We just saw BorgWarner. They're a good business. They're 14 or 16 billion dollars in revenue, which is pretty big. But we're talking $200 billion in revenue, 200, growing by 22%. So they're adding more than $40 billion of revenue to that top line each year. See how we went from 164 to 200, 134 to 164. So they're leaping each year, just making themselves bigger. And when they make themselves bigger, and you got these margins that are just fantastic, 82% top line gross margin, profit margin of 30%. They get to keep 30% of that 40 billion. So it's like they write themselves a check at the end of the year, like, hey, what's our profit, incremental profit this year? Well, 40 times 30%, we got $12 billion of profit that we added to our income statement. And it keeps getting bigger because the top line number keeps getting bigger. That's just a fantastic business. I mean, it's just like, whoa, that's a incredible business. And they have a lot of cash flow. Now, in previous years, it was better, but then they decided, hey, we got to be a player in this AI era. Got to be a player. Can't argue with that. And they are seeing their cash flow go down a bit. I think that's going to be temporary, and they don't have a perfect AI strategy just yet. We'll see how it comes about. But they need a big moment in AI. If they get a big moment in AI, like a OpenClaw moment or a DeepSeek moment, this stock's going to double fast. But that's just total hypothetical. I don't know that they have something in the works that's going to blow the market away. So this stock is going up 1.38%. It is covered by all kinds of analysts, 40 analysts. They think it's highly discounted. And this year, look at this growth. Look at this growth there, 27%. They're going to go from 200 billion to 255 billion. They're going to grow $55 billion. That's a big business. Okay, that's a big business in the US. Globally, that's like, whoa, that's a big business on its own, just the growth. And they're going to have all kinds of profit coming out of their ears. They're going to have too much cash. They don't have enough room to store it. And down the road, they're going to continue to grow. They're going to be a gigantic company. So if these numbers happen and I wake up and Meta has a PE ratio of 11 growing at these rates, I'll be surprised. It should have a PE ratio in the 20s. Okay, this is a superb business. Right now, the market is saying, hey, I'd like to give you a discounted price on this awesome business. That's how I view it. That's how I see this business. Looking at the fundamentals going, man, I'd love to own this business. I actually own this business. I have a lot of shares with Meta. And I own too much in communication services. So I got to be careful not to overdo it in that sector. But the fundamentals just look fantastic for Meta. And this stock has not been a stock that has been free of naysayers or criticism, obviously, like they just got taken to court. And that criticism sometimes creates opportunity. I think we're in a period of time when it's an opportunity. I'll show my valuation because this is one that's I analyze at least 10 times a year because it's a big position in my portfolio. 51% discount. I agree with the analyst at 46. So this is solid, man. This is as solid as they get. This is clear. It's easy to understand in my book. And they got money coming out of their ears. They got the potential of AI being one more area of opportunity for themselves. So I'm looking forward to seeing your charts because Meta, I think, it's going to be an interesting one for you, Daryl. So tell us what you think of Meta.
Yeah, I'm also a holder. I can tell you what I did here recently on it. I put out a complete video on this one, but I noticed a head and shoulders pattern that actually triggered. So about right here, I sold all of my holding at $598 because I had a price target. Basically, when you see one of these head and shoulders and you create the neckline, you take from the top of the head, not this line, this is just to show where the head is, but the price at the head, measure down to the neckline. And what I did in this case was just draw a vertical line, make a copy of it, and drag it to where the neckline, where it breaks below the neckline.
Mm-hmm.
And that gets me the price target of 528. So it took 2 days, but boy, am I glad that I sold out because I was even on my shares. It wasn't like I had a big gain because I had just started buying back here. So I was about even on my shares, and I didn't want to hold them when I saw this pattern form because I had a feeling it would probably go down to here, and it almost did it exactly to the dollar. So I bought back here in this big drop, and then I added double my position right here. So
Mm-hmm.
that was a good play on my part based on this pattern. And that's why I completely sold out because I was somewhat even on my shares. Um, so they did bounce off, and this also is a support resistance line that we've had here for a while. So we put that line here several months ago, and basically it's connecting these three highs. It passed below it here, but we've had this line here for a long time. So the reason that I point that out is this is a 3-year support resistance line. So when I saw that head and shoulders pattern also drop to that same exact level, then I had a feeling, I had a very good high probability that they were going to take a big drop. Now, I had no idea when I reviewed that head and shoulders pattern last Saturday
Mm-hmm.
that they were going to lose 2 lawsuits the following week. I mean, I had no idea. All I could see was what the price action was telling me, that something was going on that was going to affect their price. What the news was, I had no idea. I found out 3 or 4 days later what the market was preparing for. That's why I watch price action so closely, because this is collectively what the entire market is doing with their money. So I have more faith in that than what's coming out of their mouth 90% of the time. So anyway, that's why I sold and then I bought back in. So I think I'm positive on those shares again, where I was just at really break even. So anyway, we got a downward sloping 50, a downward sloping 200, a 21-day that's downward sloping. We started out with the black candle here this morning, but it looks like we've turned that to a white candle. So they are trading at the high of the day. We've only been trading 9 minutes. They did have good volume yesterday. Looks like 2 or 2.5 times the normal volume. So whenever you see large price differences in the candle here, along with good volume, you know that's a bullish day. We had the day prior was also somewhat bullish. We created a hammer with a long downward tail, so that indicated to me that we were going to have an up day here, and we did. The RSI is back above 40 after being extremely oversold last week. We are getting our PPO line that's starting to move higher. It hasn't crossed the signal line yet. We are starting to get some accumulation back into the stock, so that's good news. We'll see if they can keep this up.
All right. So I've been playing double duty. I just transacted a few trades, a few sells. I analyzed my portfolio and wanted to create a little more cash while things are good. And those two trades are in. All right, let's take a look at this heat map. Let's see what it's looking like. And it looks like Pierre wants to look at race, which I think is that Ferrari?
Yes.
All right. So I think it's Pierre. We'll take a look at that. Very good to see you. Looks like we've got a member that is lighting up the chat. The Bud Force. Keep bringing it, buddy. Falls Grave. Let's take a look at ServiceNow. Man, the software space. You know, I have worked in the software space for a long time. And I just think that it's overplayed, the sell-off. Now, I've also been working with AI using Claude, Gemini, OpenAI's ChatGPT. I've started to use OpenClaw. I've developed apps using AI. So I've been really impressed with what it does. I also know the software business, and I think it's overplayed. Happy to look at ServiceNow. We'll talk about software stocks while we're at it. All right, so back to this heat map. A little bit of what we saw yesterday. These big caps are moving higher. Looks like
you're not sharing your screen, by the way.
Really? Man, glad somebody's paying attention. All right, here we go. NVIDIA up 1.16%. Micron's up nicely. AMD's up higher. Intel's up higher. The whole semiconductor space is rocking. Look at that. And the hardware space is looking good. Google is up higher. Looks good. And Meta is looking good. The industrial space, Caterpillar, GEV, looks good. Energy is down. I'm probably going to buy some energy today. And it's just my little insurance card. Because, you know, we are one news headline away from oil going up another 5%, 10%. We're one ship getting hit by a drone away from oil stocks, you know, getting more money. Looks like healthcare is having a good day. Looks like really it's across the board. It's not setting any records, but it's good to see that. It's good to see the kind of like the broad participation. Like you got technology, got some stocks doing great, except for software. Looks like software is taking the day off. And where's ServiceNow? It's in here somewhere. Looks like our friends over at ServiceNow are pretty much flat. So we'll take a look at this. All right. Consumer staples are under pressure. Not a bad day to pick up a few shares because these two sectors have been the winners this year. They're having a bad day, but they're having a good year, especially energy. Energy has been performing great. And all right, so that is the market. Now I've got a list of requests going on here. Let's take a look at DHR. That is a stock that Ricardo wanted to take a look at. Danaher Corporation designs, manufactures, and markets professional medical research and industrial products and services in the United States, China, and internationally. The company operates through biotechnology, life sciences, diagnostic segments. Biotechnology segment provides technologies, consumable services. Okay. Diagnostic and research in healthcare. Cool. Let's take a look at their website. All right, so leadership or businesses. So diagnostic equipment, what that means to me, and I'd love to get your thoughts on this, is they're screening, and I'm not sure Danaher gets involved in this, but like say they're screening for certain cancers or screening for certain illnesses, maybe doing gene kind of analysis and saying, hey, you have the makings of this illness, disease. You may want to start treatment or look out for that.
Yep.
Okay, so we know what the business does. What's the stock been doing? It's not been doing much. It's pretty much even, Steven, or down 7%, but it's pretty consolidated, I guess. It had a pretty good run in parts of, look at this run here. That would look pretty good, but it's been under some massive pressure, down 17%. It's a pretty good size cap, 134 billion. Revenue 24.5 billion. Forward P 22.55. Okay. Small dividend. Strong buy, discounted according to the analyst. Now, this is, I really study revenue growth because revenue growth, there's no way around it. If you have a business that's growing top line, that means more customers are using this diagnostic, product, all the stuff they're selling. If they're flat or even contracting like they had a couple years ago, then I'm concerned. Okay. Now the market was buying into this growth. You saw that for a while in 2025, it was really doing well. And that's because these numbers were okay. I'm not going to say they're great when you're growing single digit. In biotech, that you're seeing, you have access to some pretty good pretty good stocks that are growing nicely. Now these tend to be nice and profitable. So the revenue growth, for me, they get a C minus. It's like, okay, the last 3 years, you haven't been doing great. Last 3 quarters are good. You get a passing grade, but just barely. Gross margins are 59%. It's pretty good. Pretty good. Profit margin. Okay. Now what's going to be key is let's take a look at the forecast. And we've got a good number of analysts covering at 15, and the forecast does look good. So we're going from no growth. They probably got some products into their portfolio. They're growing their business using maybe some new products that they have. Cool. And now they're beginning to grow. So this growth looks good. Not a bad situation. Okay. Profits are really expanding. So that looks good. This year is when you see a big expansion of profit. And you'll be buying this biotech company, I guess, in a high teen, low 20s PE ratio. All right. So high level, and I'm going to update my valuation if I don't have it or create one. But high level, I'm not convinced their revenue growth by their revenue growth. Okay. They got something that is really, really useful. They should be growing faster. And there's a lot of great choices in healthcare, terrific choices. Like there's some businesses out there that are fantastic. They've got top line growth, awesome margins. They're just really, really exciting. So in that kind of scheme of things, the Danaher right now is like, I'm a little skeptical, but I'm going to do the numbers. We'll come back to it. Who knows? Maybe Daryl has a different point of view on it. What do you think, this stock, Daryl?
Okay. I'm looking back 5 years. I was trying to find a good auto support. resistance line, and I'm not really seeing a good one. It's been a roller coaster ride. They've been as high as 287, currently trading at 190. So let's just, well, before I do that, I do want to point out they've pretty much been underperforming the S&P 500 since 2023. So unless you have a really strong view on this company, my recommendation, not a recommendation, but what I would do, I guess, is I'd just buy the index because they've been underperforming for 2 or 3 years. They're underperforming or right at what their healthcare sector has been. And then they started underperforming at the end of October. They're underperforming their own industry group. So there's probably other companies in this industry group that are performing better because this is their peers, and they can't seem to outperform them except for a couple of weeks over that time frame. And then if you look at the sector or the industry group overall, that industry group has underperformed the S&P 500 since 2023. So just given that kind of information, it would not be of any interest to me from a technical perspective. So they had a 50-day cross below their 200-day. We all know what that's called by now, probably. That's called a death cross.
Yep.
Typically, that starts indicating that if you really believe in the company, that's a good time to buy. And just wait, wait for it to recover, because that's typically what I see here. This is when I start getting interested in the companies that I hold. If they have a crossover like this, that's where I typically start adding more to my position. They are trading above a 40 on the RSI, but that's bearish at the moment. You need to be above 50. They did have a bullish crossover, but it's in very bearish territory on the PPO. The bullish crossover is when the moving average crosses above the longer term moving average, which is called the signal line, that red. Accumulation has just been up and down over time. The money flow is currently negative, but we are getting a bit of a accumulation, just a bit here I see for over the past week. So I'm not seeing anything here for me personally that gets me excited about what I'm seeing technically from this chart over the last 3 or 4 years.
All right. Well, I finished a brand spanking new valuation on Danaher, and here's where the numbers land. This stock is priced a little too high. They just don't generate a lot of cash, so they can't prop their valuation higher and make it so that you're buying into what could be a long-term good investment. And when you invest in companies, right, you need to see, what's available in that sector or industry, because we buy in a market of stocks, right? And in biotech, there's a lot of really good looking stocks. Healthcare has not been a, a rallying sector overall. It's been kind of under a lot of pressure. So you could find really good value there. This one's not one of them. It would be a total pass for me. It would be a do not buy. situation. A stock that I've been talking about for a couple of years on my channel is United Therapeutics, and this thing's been a rock star, and it's growing its top line. It's really exciting future. It's got it all. It's been going up a lot, so it's kind of hard to convince yourself to buy into it. I'm already in, so I've already made a very good gain. I'd love for this to be a nice 5-10 bagger, and I think I'm on my way. But this is what's available. If you can find the next United Therapeutics, that'd be fantastic. Finding something that is got really good bones to it, like really good profitability, very good growth. They have um, very good pipeline of drugs, or in this case here, like different products that you use in healthcare. And the other thing I'll speak to is, like, United Therapeutics has been creating new drugs that have been really effective. And obviously that's going to be a dollars and cents factor. Like, hey, their revenues are going to go up. You see it. But it also tells me that the culture at United Therapeutics is excellent. It's a culture of innovation. They have got really smart minds over at United Therapeutics. And I expect even more, great discoveries to come out of this business. Where when you have a Danaher and they're not growing and they're not, creating some positive, headlines with, hey, we created this, and it's, this new treatment or this new screening, process that is going to really change a lot of lives, then you're going to be ignored by the market, in my opinion. So that's where I stand on Danaher. It's a total pass for me. Thanks for asking, Ricardo. Great to see you. We're going to get into Ferrari next. And we're going to take a peek at this heat map. Looks like the market is fading a little bit, saying, well, maybe we're not convinced. Looks like the oil sector is really coming down, huh? Look at that. Hang on to your hats, folks. And these guys here, these independents, right? Or my Oxy trade. Ooh, it's still doing great this year, but down 4%. I'm going to buy some Oxy stock today. I'm going to buy some Chevron stock. Probably going to buy all of the above. It's my insurance policy. Software, geez, we're going to talk about that after Ferrari, but it's under some pressure. Google flying high, and it looks like the big banks are doing well, huh? Look at that. And maybe the big banks are responding to the employment data was better than expected. There's jobs created. And the retail, what was the retail report conclusion? I already forgot.
It was a little above expectation. I think they were expecting 0.5% month over month, and it was 0.6%.
And I'm going to respond to a quick question on United Therapeutics. So, Scalehard, the way that I view an entry point is I like, so what are my strengths, right? Every investor needs to define or understand, based on your age, the things that you feel like you're really capable of doing from a knowledge perspective. Like, hey, I really know these industries. Do you feel like you are better at investing with a long-term mindset? Or are you better at picking up trends and trading and making money this month, this quarter? And hey, whichever lane you pick that you feel you're best at, then you're off to the races and you could do well. I happen to be on the lane where I have a long-term focus. I like buying excellent businesses. So when I look at United Therapeutics, it's a business I want to own. And I look for the market to bring down the price of United Therapeutics. And it does it in times when everybody's pessimistic. Oh man, I don't know if it's going to work out for these guys. I'm not too too sure about it. Okay, I'll buy some more shares, and then boom. Okay. So you could have doubled your money on this puppy in less than a year. We are dealing with some prices that are a little high right now in United Therapeutics. So what I would encourage, if you're an investor like me, it's about understanding, hey, this is a business that if I was given the right price, I would buy it. And then you state your price, right? Is it a 35% discount? This is a smaller business, so I'd want a higher discount, maybe 35%, maybe even 40. And then wait for it to come down, right? Our friends over at Meta, we know what they do. They're discounted right now. I don't think anybody's going to argue with that. Fundamentally, their profits and cash flows, it's just math. Add them up. They're worth more. So that's how I would answer that question. I don't have an exact, hey, it's $525. No, I go through it more. That's a qualitative process that is supported by fundamental analysis. So that's how I go about it. Thanks for asking. Hopefully that was interesting to cover. Mike, the dividend investor guy, has made it to the stream.
Which market is he watching getting clobbered? I see them all up 0.75%.
Geez, yeah.
What are you looking at, Mike?
Maybe Mike can see the future, and I'm going to refresh my screen here. No, we're still doing okay. Yeah. So Mike, I've got good news for you. The market's actually going higher. Good to see you, Mike. And we could use a few good days. We've been in a tough market. This year is a market where, there's been enough negative news to make it kind of one of those markets where it's like you got to ignore a lot of the noise. You got to just move on. And then when we start going, into a nice bull market, everybody's happy. And it's like, all right, everybody's taking their happy pills. Great. Right now, everybody's taking their, man, is this war going to ever end? Oh, how can it get worse? And oil prices. And I would say that oil is, it is the price per barrel will tell me what the economy is going to do and what the market's going to do. It's a very good barometer. If we stay above $100 per barrel, this market's not going to go much higher, period. If it comes down to $70 per barrel or lower, this market's going to flourish, because that difference is a big cost difference to all the manufacturers that you need oil. You think about where oil shows up, it's in all the plastics that we're dealing with. It's the Uber ride. It's the gasoline tank that you just filled up. It's, just on and on. It's the fuel that airplanes need. It's just everywhere. So where oil prices go, so will the market. If oil prices come down, the market's going to be opposite. It's going to go higher. And we'll see where it goes. All right, let's talk a little Ferrari. Now, Ferrari is an interesting business. Last time I looked at it, and I don't think it's changed, it is they don't make a lot of money on cars, but boy, their licensing deals and everything else they do is where the money's at for this business. They actually sell few cars, but of course they are legendary, right? These beautiful sculptures that happen to have tires and engines and move around. Pretty darn cool. And they have an F1 team, of course. And these guys, again, the money has been where the licensing takes them. Now, this thing was a really good performer, but it's been under pressure. See this performance here? They went from 180, geez, up to 500. Oof, man, it looked like a genius trade here. Now, along this way, I just thought this thing was priced way too high. PE ratio is really high. And let's take a look at their growth. Again, I'm looking at top line growth. And top line growth for these guys, it was doing better in previous years, especially coming out of COVID. People had a little more discretionary income so they could buy that Ferrari jacket, or, a lot of Ferraris were being sold, by the way, because people that have the money, the means, were buying Ferraris. So 7% growth isn't bad, but it's not good either. It's a growth number. And especially you see this most recent quarter at 3.8. So, and these guys are officially a car company, unless we've got a different classification. Auto manufacturer. That was in Italy in 2023, and this did not make it on going to the Ferrari museum. It was just kind of out of the way, and I was like, yeah, it's too much travel time to go check out Ferraris. I live in California. I have access to plenty of Ferraris, and I have access to some of the coolest car museums there is. In Los Angeles, there's this car museum that I've been to, and it's got beautiful cars. And then near me is this gazillionaire created this museum out of his private car collection. He's got a bunch of Ferraris in there, so I could see Ferraris if I wanted to. All right, so market cap 58 billion, 4P 29. Let's take a look at this forecast for the business. We got 7 analysts covering it. They think it's discounted. So the growth is going to continue. Okay. So the growth is, again, not good, not bad, just in between. It's pretty decent. The forward PE is a little expensive. I forgot to look at their margins. Let's take a look at that. I'm going to look at them through a different screen that Stock Analysis provides. At the very bottom here, they'll show you their margins. So gross margins aren't bad for a car manufacturer. This is like, wow, this is really good. 51%. That's really good for a car manufacturer. Of course, like Meta was at 82, so that's exceptional. And their profit margin is very good for a car business. Again, most of their profits is on that licensing side, and that's where the money's at. So interesting. So this thing's looking, the numbers look pretty decent. I don't know if they're discounted or not. I'll take a look at their valuation while Daryl takes a look at the charts. Over to you, sir.
Okay, so I'm going to start out with a 3-year chart, put some auto support resistance lines here. This top one, they traded around that level in 2024. And at the end of 2024 and 25, April tariff announcements, they dropped below it, so I tend to ignore that one. But then they broke down through that line, and they have not recovered that resistance point at this time. This next level, I only saw maybe tested once or twice. So basically, here in 2023, they came down and tested it on a daily basis or an intraday basis in January of 2024, and they bounced off that level. So that's why those two lines are there. So they did drop down below and close below that level on the 20th of March. Looks like they traded right at that level for several days. Traded below it last Friday. This was on a Friday as well. So we have 2 Fridays there where they closed below that. And now they're starting to get some action. 2 of these are black candles. One is a white candle. White candle means it opened lower during the day and traded higher throughout the trading day. The black candles means it opened higher, but it traded lower throughout the trading day. So we have one day where market participants were driving the price up all day long, and we have 2 where you had an initial bounce at the open and then not a lot of enthusiasm for the rest of the day. This was on a big volume day, so it looks like probably 2x the amount of typical 50-day average volume. So you got nice volume, you got a nice price action. That's usually pretty good news. They're trading just above their 50 RSI line, so that puts them in bullish territory. They did break out above or all the way to near over sold here in February, and they haven't been above 60 since that point. So we'll have to see if they can keep driving and get above that 60 line. They do have a bullish crossover in bearish territory. They peaked out on their accumulation back in October. So kind of coinciding with the technology sell-off and distribution. We're seeing that same distribution here. The money flows have been pretty much negative since that October time frame. So they've underperformed the SPY by 31% as of right now. They are underperforming consumer discretionary. They are underperforming the automobile group, and the automobile group itself is outperforming the SPY. So you got to like this company to buy it with this kind of a chart. But when we look back over that 3 years, I mean, there's times when it really does perform well, but it's not looking good at the moment to me.
Yeah, well said. Some stocks are easy for the retail community and pretty much everybody to understand. And Ferrari is one of those stocks. And other examples are like Nike. Okay, I wear a pair of Nike. I have a pair of Nikes on right now. I get their business. Okay, that's cool. But it just doesn't automatically mean it's a good investment. So just keep that in mind, that the investing that I do, again, I'm a long-term investor, successfully growing my portfolio, trying to double it every 5 years. And for me, it's not enough that I know what the business is about. I understand it. I'm a fan. I like Ferraris. I think they're cool. No, it's not enough. I think what's cool is making money and seeing your portfolio just grow. Right. That's my goal. And Ferrari is priced 23% too high. Their cash flows are decent. Again, their margins are good, better than like Ford, as an example. I think Ford's up here. And this one here, just the cash flows don't add up. The earnings per share doesn't add up. I'm not going to give them a 25 PE. They're just not the type. I'm looking at numbers. When I look at a company, I kind of remove a lot of like the shiny object kind of facts about the business. And Ferrari is a pretty bright, shiny object. And I look at the numbers. Their margins are good, but they're not exceptional. I'll give them an 18 PE. That's what I'd pay. Their growth rate isn't like off the charts. It's going to be 7% on profit. So for me, it's not a buy. It's a pass. And I'll watch the highlights on F1 races. And I think Ferrari's doing pretty good this year. But Mercedes is number one right now. Ford happens to be a better buy. Now, Ford's not as cool as Ferrari, but they're making money. And Ford's been a really good stock, by the way. It's been a really good stock. So Ferrari's been added to the watch list, everybody. If you're a advanced member, gold member, I added it. We added 3 stocks to the sheet. Yeah, Ford versus Ferrari. That's right. But see, Ford is practical. You want it. I think the story was around Le Mans, right? The Le Mans race. And they wanted to be competitive there. I think it was kind of an ego trip. And then once they got that out of the system. They went back to, hey, let's go make money. And they got back to making just regular cars. Looks like Google's just, hey, we're here to stay, everybody. We're going to be one of the valuable businesses out there. Amazon, okay, that's been one of the stocks that I've said that stock's going to be worth a lot more. And I bought it. I'm putting my money where my mouth is. And that's looking good today. All right, looks good. Micron is just killing it. Look at that. AMD rocking. Applied Material. So I'm in TSM and ASML, so I'm sure those are doing great. All right, looks good. Look at the industrial space. Jeez. Real nice and green. Exxon's just melting down. Oh my gosh. What's going on? Like, is Iran and the US hugging it out right now and oil prices are coming down? I guess so. That's good.
That's my guess. I'm not as excuse me, I'm not as optimistic as you are about energy. I think it's kind of peaked out for a little while.
Mm-hmm.
So that's my opinion. I'm not in the same camp as you are on that. I actually trimmed some of mine.
So here's what I'm thinking, Daryl. If these stocks go straight down for the next 3 months, I win.
Yeah,
because that means my position in Google, Nvidia, Microsoft, and go down the list. I made so much money. I'm like, I'm so glad my Chevron stock is heading to zero. Man, why can't it get to zero anytime faster so my Google stock can continue to go higher, Meta, Amazon? Now, if we have the other outcome, which is, you know what? Iran and the US, they're mad at each other. And, for all we know, some rogue unit on either side does something and it triggers a bigger, a period of conflict, and oil's at $150 per barrel. And these stocks are lit up like super green. Everything else is red. I'm not as happy, by the way. I'd rather have this area super green and this be red. But at least I'm limiting my losses because I'm in this space. So that's my insurance policy. That is I underwrite my own insurance on my portfolio. And that's how I do it. Just trying to say, hey, you know what? I hope energy sells off, but I'm buying it. And those are the reasons for it.
Well, some of those bigger names, I mean, even though they might be selling off right now, they have good balance sheets. And they're going to do well.
They're some of the best run businesses on the planet.
Yep.
These guys know their business backwards and front.
Yep.
So I worked at a company that is now part of Chevron. The company was called Unical. That was my first job out of college. To this day, that education they provided to me as an employee, it's solid. These guys 100 years ago, this was the internet. This was AI stocks. Of course, they created the wealthiest guy on the planet. So it was the industry, and it stayed that way because the demand for oil has stayed. All right, enough history. Let's get into another stock, which is ServiceNow. Requested by Falls Grave. Good to see you, Falls Grave. It's under a little bit of pressure. Now, this stock, man, look at that chart. Daryl, what's going on here? Now, this business, you look at this chart and you're like, now we saw some charts where the revenue was a little bit of growth, the profit wasn't all that great, yada, yada, yada. So on the surface, you're like, boy, the fundamentals are going to look bad because this communicates to me high level. We're in for seeing some ugly numbers. So let's take a look. And the forward P is 25. This is a software as a service company. They focus primarily on, I'm going to call it service events. So if you're in IT, or excuse me, if you're at a company, you need IT support on an issue you're having, ServiceNow, or everything ticketing wise, that's where they started. And they're doing other things as well. They're big into that space. It's part of CRM. It's part of customer experience. That's where they play. Their CEO was a CEO of SAP for a long time. And before that, he worked at Oracle, which is somewhere where I worked for a long time. So Bill McDermott, super quality CEO, really charismatic. If you watch him speak, that guy's got talent, man. He can have his own talk show at night if he wanted to. This company, again, stock price is going down. We were seeing some stock prices that were flying up that were 7% growers. This thing's growing at 21%. All right, looks good, but do they get to keep a lot of that revenue in the form of profit? Absolutely. Look at this, 77.5%, 13% profit margin, free cash flow margin of 34%. So when they're growing by that 21%, they get to keep a lot of that money on that balance sheet, ready to go, ready to invest in AI, ready to grow their business, acquire other businesses. So this business continues to grow. And the big story is AI can potentially create new competition for ServiceNow, because developing software factually has gotten much easier, period. It's gotten less expensive. Developing software, right? Just a crash course. We all know what computers are, right? It's a CPU, it's a user interface, and that software behind it. For a long time, the moat was having an organization with the knowledge to be able to develop software and put that knowledge into products that were very useful to companies or individuals. And then those individuals or companies get so much value, they're willing to pay a subscription for it. And voila, that's the software business. And AI is putting the new threatening story of, well, now more companies are going to come to market with their product to do ticketing, customer service, and so forth. And it's going to be new competition to ServiceNow. That's absolutely a rational expectation. I agree with that. But the other piece that we need to keep an eye on is if I remember when Hewlett Packard, when they were great, right? Now Hewlett Packard's not as great. I'm sorry to say, but in the 80s, Hewlett Packard was Apple. It was NVIDIA. It was super cool, right? You remember Hewlett Packard in the 80s?
Yeah, I was a big fan. I worked on a lot of their equipment, so I'm
They had a
very familiar with
philosophy.
them.
I read it in the Wall Street Journal. That's back when we read newspapers. And they would self cannibalize their own products. They had a philosophy that we need to look at our products and we need to disrupt them, because if we don't disrupt them, another company will. And that's a threat. If I disrupt my own product, I get the future revenues. If my competitor disrupts that product, they get my future revenues. So that was their philosophy, and it was a very good philosophy. Somewhere along the way, they lost that mojo. They lost that culture, and Hewlett Packard's never been the super cool, super valuable company. ServiceNow has to disrupt themselves. They have to say, hey, in 2025, we used to do it this way. In 2027, it's going to be fantastic. The UI is so much better. You literally just talk to your computer, and I'm just making this up, and it creates a service ticket for you. It does this, that, and the other. They wow their customer like, geez, man, you guys are so far ahead of the competition. You got these small businesses coming into the space saying, hey, look at me, and you guys are better than that. You know, they have to stay there. And that'll be measured by this line. Revenue growth. Right now, it looks great. But you know what? The market is like, you're guilty until proven innocent. Okay? It's not It's not like they don't have the same rights as us citizens. And they're going to have to prove that they're going to grow, and they have to grow. They have to accelerate their growth. If ServiceNow begins to slow their growth, the stock price is going to just continue to be under pressure. They're not going to get out of this corner they're painted in by the market. So, I mean, I look at the numbers and you're like, geez, this is a really good looking business. Now let's look at the forecast. One analyst is like, man, he must work at ServiceNow. Look at that. He must have like 80% of his portfolio in ServiceNow. But now we have 51 analysts, 50, 20. Okay, this is a pretty good group of intelligent analysts. And could they be biased? Absolutely. But bias means their numbers are 10% a little too good. They're 10% a little too pessimistic. Okay. They're still kind of in the ballpark. And when they're telling me, hey, this business is going to grow by 21, 18, 19%, and 18, there's no disruption baked into those numbers. It's expected that ServiceNow is going to grow, and their margins are excellent. Forgot to cover margins. We'll come back to it in a little bit. Their profits are going to expand. Look at that. Let's pretend that ServiceNow, just for the moment, is not a software company. They're actually doing financial services, or they're doing industrial, and they do services around power generation. This stock would be like flying off the charts, just screaming higher, because the market has this story in its mind that we're not too sure about software. We think AI is going to change it. Absolutely, it's going to change it. It should change it. I've been using AI, and I'm just completely blown away by OpenClaw, Claude, Cowork, ChatGPT, Gemini. Those apps have made a big difference in my individual work as a stock investor. I'm just completely blown away. But ServiceNow has access to all those technologies. They're not going to sit around and say, oh, game's over. Let's just go ahead and call it in. No, they're going to be like, look, get our engineers, get our developers. We need to be the first ones to the market that offer XYZ feature set that is going to blow our customer base away. They're going to love us. We're going to go grab new customers. We're going to do so. So that's what I'm seeing in the software space. Let me qualify my opinion a little bit. I worked at Oracle for more than 20 years. And before that, I was a consultant helping businesses select software systems and putting them in their companies. I worked with CRM companies like Siebel way back when, Salesforce, implementing using Salesforce, Oracle, SAP, which has CRM. So this is a space that I have knowledge on. It's something that I put my hands on and worked on. I wanted to take a look at some margins because they're growing nicely. I did look at the margins. Forgot that. So this is a really good opportunity. I think the software space right now, these companies, they're upset. They're like, you know what? It's like that football team that plays with a mean defense that doesn't get the respect. A little bit like the Seahawks. I don't think the Seahawks are getting enough respect this past season. Their defense was, man, I'd hate to meet those guys in a dark alley. Maybe they'd be pretty cool guys. Who knows? ServiceNow, Salesforce, Intuit, they're upset. They're like, we're under threat. And they know they're under threat. And they have to define their future. They have to create products that are going to blow us away. Or somebody else will blow us away and ServiceNow will not exist. Or they'll exist. They'll just be a shell of what they used to be. So I'm going to pop into my valuation because the software space is somewhere where I am invested. and I'm invested long term. I'm waiting for the market to kind of pivot. And look at this. Our friends over at Google, their stock's up a lot, but their darn updates to my Google Sheet are not working, Daryl.
Uh-oh.
Well, I'll take the stock increase and deal with the issue I'm dealing with because I own so much darn Google stock. Oh, there we go. Okay. See, I badmouth them a little bit and they fix the problem. 39% discounted ServiceNow. Now, I'm not a ServiceNow stockholder. I own Salesforce. I think Salesforce gives me a better proposition, but it's a buy. ServiceNow is a buy in my book. It's got a fantastic structure to their profitability growth. I think they're gonna, again, they're upset that the market's counting them out. The ServiceNow is a really good company, and I think they're gonna come out with awesome products. And there's really good value in software. So that's what I'm thinking. But I would like, because I think nobody's going to argue with the numbers. The numbers are the numbers. Numbers are a very rational, quantitative process. But the qualitative and the technicals are what are going to be critical to study, which is why I'm going to turn things over to Daryl and I'm going to be very attentive because when things begin to move in software, I'm going to load the truck with software stocks. Go ahead, Daryl.
So we're going to start off with a 5-year view, and we've had these lines drawn here for quite a while. Basically, they're just connected to some prices that it's traded at several times in the past. And then we have another one here where it's connected to several of those resistance points. So just to give you some idea of why those lines are there, because it did break down below that top auto support resistance line. They haven't really recovered except for a day or two. And they haven't quite made it down to the $93 level. And we have a double bottom here. So this might be really good support right where I have my crosshairs set at 99, and they're trading at 104 at the moment. They are trading down from where they were yesterday, but above where they were a couple of days ago. We didn't have really good volume. It was below average volume on these buys right here. So we have an RSI that's sitting right around 40, so that's in bearish territory. We have PPO that's in bearish territory. We have had quite a bit of distribution over the past couple of months. Looks like we had 1 day of accumulation on the 30th, and then yesterday was another distribution day. Money flow is currently negative. So if we go back out to that 3-year view, I'm going to show you fast graphs here in a minute. But we can see these quiescent levels that they trade at, and then markets at times just get very exuberant, and the price really runs up, above where those quiescent levels are. So anytime this is happening, I think you have to be very careful and manage risk very well. Or if you don't sell, you're going to be pretty much a bag holder at some point. So let's look at ServiceNow in fast graphs. So the gold line is their fair value based on a 34 time earning PE because of their growth is high, 19%, 20%, 21% in the 3 out years. They've had 26, 29, 42, 28 over the past 4 years. So they're definitely growing. They get a high PE. The market has traded them more at this level. they've been trading below that level for basically since the beginning of 2022. So the market isn't applying the same premium that they did from 2016 to 2021. So, if you're buying up here, you're taking on a lot more risk because they're trading above what the market typically applies to them as far as a PE and what the fair value is. Currently, they're trading below their fair value. To me, this looks like a much better entry point than, anywhere probably in the last 9 years. So anyway, I mean, if we take where they traded at the close yesterday, and even if they just trade at fair value, and I don't know if they're going to go much below that based on the threat from AI, but you're looking at a 33% annualized return between now and 2027. So this is a much better price. And, if you're buying up here, I'm sorry, but you were paying too much for it based on the chart and their valuation. So sometimes it's good to be patient and just wait. Or if you're going to buy it up here, be willing to step out if it's not working. But to me, this looks like a good entry point. I don't own this one. I've never owned this one. I don't have any interest in owning this one. But if I did, this is where I'd be getting interested.
Very good, sir. So I'm doing some trades here. Sorry. Let me get back to you. What we're talking about here. So here's a I think a tougher question. And maybe it's for a future conversation is put yourself in my shoes and you're looking at the software space as potentially a space that's going to be worth 2 to 3 times more in the next 2 to 3 years. That's really my mindset is if these software companies can prove that they are going to disrupt themselves and say, yeah, you're right. AI is going to disrupt the product we were making 5 years ago. The product we're making for 2026 is far better and it's the UI is different, so forth. But it happens to be a disruption that ServiceNow disrupted ServiceNow. And now we're actually charging more for the product. And we actually have better margins because it used to take us 100 engineers to do a particular product. Now it takes 10 or 5, right? So given that, what are you looking for that would tell me, you know what, this thing's has the potential to continue to go higher from this point forward?
Oh, that's a good question.
And maybe that's the topic we can kind of take as a homework item and kind of beat it up a little bit.
Yeah.
Because somebody's going to be wrong. Okay.
Yep.
Somebody's wrong. I could be wrong. The market could be wrong. Who's wrong? Whoever's wrong is going to lose money. Whoever's right is going to make a lot of money.
Yeah. And based on this, I think you're right. At the prices that you're buying it at today, you're right. Because they're still growing. I mean, I'm looking at double digit growth here. I'm looking at a great PE. I'm looking at a company with a A credit rating. The reason I'm not interested in it is I'm a retired guy. I need income. They don't pay any income.
Mm-hmm.
And as I transition, once I start Social Security, that's going to take care of a lot of my expenses. So I will move to more growth at that point. But today I need the income.
Mm-hmm.
They're not an income payer. I can look at paper gains all day long, and that doesn't put food on the table for me. So what you're saying, I think, is exactly true. There's probably not been a better opportunity to buy this company as there is right now. But if you bought even in 2021 to now, you've lost money
Yeah.
if you've held it.
Yeah. And
And despite being underpriced and the market was paying way too much for it here,
mhm.
because the market's saying it's today, right today, it's worth this. So,
Yeah.
but basically, I think you're right. I mean, right now, if I was really a growth type investor, and I will be transitioning to that, and I have been doing that over the past year. This is a great opportunity in my mind.
Yeah. And that's what like Meta as an example, right? In 2022, it just couldn't have gotten uglier. It's like, oh, metaverse didn't work. Oh man, you know, it just seemed like negative news feeds negative news. It's like it just keeps growing, it's sprawling and so forth. And with Meta, it was just like dog pile on Meta. And those who just held their nose and bought at $86 a share, looking at the numbers going, somebody's wrong. And those who bought, including yours truly, were like, sweet, look at all that profit. I think we're going to have that moment in software. Not all software companies, but we're going to have that moment in software. Were you going to show something on Meta?
It's just interesting. They traded way below what their fair value was. I mean,
Mm-hmm.
this was an absolute smoking deal
It was.
back here. Um, we're looking at one of the best deals that we've seen in probably the last year and a half or 2 years right now. This is another one. It's interesting that the market back in the early days, they traded above fair value and their normal market multiple. But basically, since 2018, they haven't even traded at what the market would typically uh, trade them at. So it's kind of interesting to see a blue line below an orange line here. Normally, with most companies, the blue line is above the orange line. So this is one that the market has typically traded way below what's fair value and their normal market multiple. But this is another, to me, really good deal. Even at the normal market multiple, you're looking at 43.85% total annualized return. If the market, trades back up to that level with these growth rates, you're going to see prices around $1,000.
All right. So that is Meta. Good stuff. It's looks like we got through the request. We had one more, Arista Networks. Ricardo wanted to see Arista Networks. Take a look at that. That's an interesting one. And let me share my screen. So ServiceNow is pretty much even, and I'm curious to see what's it done over the last month. And the software space did see kind of a nice little rally, and then it faded more recently. We'll see. We will see there. Um, Looking at what is moving, looks like we're a little lower than before, but pretty much the stocks that are working today are working. Interesting. So the industrial space is doing great. Huh. Looks good. I guess lower oil prices, like railroads, transportation, logistics, they manufacture a lot of stuff. So that's an input cost. That's going to help them. Okay. And then I've got one commodity, one material stock that produces steel. So that's probably doing well. All right. So let's take a peek at Arista Networks. And Arista Networks is two things. I think in their early days, they were a networking company, and they created a pretty substantial cybersecurity business. So those two businesses is what they do. And they have been a stock that at times has really worked and it's really sold off. And I thought that they were too expensive when we were getting in this range, and they really sold off harshly. But look at that. They really rallied back. Now they're under some pressure. So is this thing a buy, or is it a watch, or is it a sell? So their market cap, pretty good sized market cap, 158 billion. Forward P looks a little high, 34. We'll see what their growth looks like. It's a strong buy. So their growth is pretty good, like 28.6%. That's really good. It's a small business, right? So we got 9 billion. I thought they were bigger. Like Cisco's much bigger than these guys. 28.6%. That's pretty good growth. They are growing fast. I mean, these data centers need connectivity. They need to connect. So this is fantastic growth, and I think they're going to keep growing. They're going to be needed. Margins are good, 64%. Profit margins are fantastic, and their free cash flow is good. So this stock probably weathered this whole correction, so to speak, better than like CrowdStrike, because I was looking at CrowdStrike recently. 17 analysts cover it, and their growth is going to continue. For some reason, 2029 is going to see kind of a drop in growth, but then it comes back. We're in the year that is represented in this column. Looks good. Looks pretty darn good. So we looked at margins. Stock's been doing well. Now we look at a valuation of Arista Networks. %14 discount. So the stock's been doing well. It's gone up, right? So logically, it's not really discounted. It's investors like the stock. I do not give them a super high PE because I can buy NVIDIA at 20 PE. I can buy a lot of stocks that I think are higher quality and are growing just as well for a better PE ratio than 25. So why would I pay 36 for Arista Networks? I'll let somebody else pay that, but not me. So that's where I'm at with Arista. For me, it's a watch stock. Not enough there for me to get involved. But if you did get involved with Arista Networks and you're sitting on a gain, congratulations. Nice work. It's been a good one. Over to you, sir. What do you think of Arista Networks?
Okay, so they are in distribution mode. They're trading below their 50-day, their 200-day. They're 112% above their most recent 52-week low, and they're 23% below their recent all-time high. We have this support line here that goes all the way back to January of last year. During the sell-off in February and March, and in the tariff announcements, they broke way below that. They come back to trade back above that on about the 1st of August. Traded above it, come down and tested it a few more times, and they're testing it again right now. So this does seem to be a pretty good support line. They did close below that line on the 30th, and then yesterday they was able to recover back above that. We're getting a trading candle right at this very moment that shows a lot of indecision. So the price went way above, way below, and yet it's trading right about where it opened this morning. That candle's body is very, very small. I pointed out on this one the last time we looked at So we had a bearish negative divergence here. That's when prices are going up, but you have an RSI that is showing lower highs, and that also is on the PPO, where you had higher highs and then a lower PPO, even though you were getting higher prices. That normally leads to a downturn in the price. We've seen this on many, many charts, but I want to point that out. They are trading below their 200-day moving average, which is still upward sloping. 50-day looks to be just about flat. They're trading just below their 21-day, which is downward sloping. The RSI is still in bearish territory, sitting at 46. And we are starting to get an uptick in the PPO, but we're in bearish territory here. So they're pretty much been trading sideways for quite a while.
Interesting. Yeah. And I think the business prospects for Arista Networks look positive. It's just the price of the stock's high. And I know some investors are like, hey, that doesn't matter to them. It does matter to me. I like my cake and I want to eat it too. I want something that's working and something that's going to have really good bones to it, really good valuation. And I think I have better choices than Arista Networks. Nice work, sir. Looks like Mike, the dividend investor guy, is with us. He wants to take a look at a couple stocks, starting with Path. Path is I'm going to call them a software company. They have an automation platform. So they have robotic processes, and in a way it's like a form of AI, right? You can have this complete task for you. Now, this one here hasn't been growing a whole lot, and I'm going to kind of change my comments that I've been sharing about this company because I began to use OpenClaw, and I'm going to talk about that later and say how that's going to likely hurt Path. So the growth has been really good. It's been growing. Okay. That's really good. It's a small business. So with all the noise and excitement about AI, a business of this size that's right at the heart of AI should be growing fast, like 100%, like 50%, something like that. And they're growing 12%, which is kind of, it's good, but man, you should be doing a lot better than that. Really good gross margins, and they have cash flow. So the valuation is there for a UiPath. It really is. When we look at the forecast, again, it's underwhelming. It's good growth, but it's not like, wow, man, these guys are going to be awesome, which is why I think the stock hasn't really achieved like awesome status. It's pretty much for moments really went up because the story was exciting, but more recently, boy, it's been a rough ride. Now, I used OpenClaw, and OpenClaw does exactly what these guys do. The problem is OpenClaw is open source. Open source is free. It's hard to compete against free. So, and more holistically or more strategically, if you look at OpenClaw, let me try to open that up. Both the OpenClaw innovation represents two huge risk factors for Path, right? First, will some of the users say the OpenClaw user experience is really good? I prefer that versus UiPath. So they take some of your customers away right now. Again, OpenClaw is free. I use it. It's free. You have to connect to large language models and then you have to pay there. But that's kind of like, hey, you got the magical software for free. So immediately this puts pressure on Path. But the other thing I would say is OpenClaw came out of nowhere for me a couple months ago. What's the next thing that's going to come out of the woodwork? Right? Some other company is going to come out and say, we're XYZ company and we do something similar to this. And look at us. And our software is provided for literally free. And now UiPath is like, holy smokes, this market's become really competitive. And it's really hard to compete against open source because open source is free. It's kind of the innovation that happens in that situation is really fascinating. Now I'm going to show you a graph that I'm not a Path investor right now, got out of it. But OpenClaw. So this is OpenClaw, its growth. Okay. You've got Facebook. Took them 14 years to achieve this growth. You have all these different technologies. And what's not on here is Linux. But you see how these companies grew their user base over a decade and a half. And then you have this one here is, I don't know what that one is. OpenClaw has achieved that scale in a month. It's like, whoa. This thing's like going straight up. This is the chart for OpenClaw. Okay. And maybe I can make this bigger. So you see this red line. It's hard to see because it's straight up. This is called parabolic. This is called, we don't see this, but every 30 years. It's like, whoa. What does that represent for our friends over at Path? All the oxygen is being consumed by OpenClaw right now in your space. Everybody's excited about OpenClaw. And our friends at Anthropic saw that OpenClaw is this huge risk to them because if all the eyeballs go to OpenClaw, what's going to be left of Claude and their stuff? So they created Cowork. So now Path has two competitors that I have to deal with. That's OpenClaw, Cowork. What's next? Is Gemini going to come out with Cowork for Gemini? Is OpenAI, by the way, OpenAI through partnership or some way they're supporting OpenClaw because OpenAI is like, whoa, hey, those guys, that growth is exciting. So that's going to be part of the OpenAI network or whatever you want to call it. So UiPath for me is a do not touch. The stove is way too hot right now. I see that there is going to be disruption there. And the train that we're seeing going 250 miles an hour, what's going to stop this train? It's going to keep going higher. It's going to go past my screen. I don't have a screen big enough. And I could probably show a better chart. Here's OpenClaw. It's like, this is where I first heard about it. My son told me about it. It's like, hey, keep an eye on OpenClaw. It's really cool. And then took off. All right. So let's take a look at UiPath's valuation. Then we're going to turn it over to Daryl. Sorry for taking long, Daryl.
That's all right.
All right. So if I can set up my OpenClaw to do the streams with you, it'd probably be more succinct. So UiPath is highly discounted, but I'm staying away from the story. It's like, whoa, too hot to handle. I'll leave it up to somebody else. I could be wrong. I'll congratulate whoever makes money on it, but it's just too hot to handle right now. Over to you, sir.
Okay, so I went back 5 years because I see it's trading at levels that it was trading at in 2022. Just to give us some context here. If I go back, that's where they IPO'd. Their IPO price was around 56. They shot up to 90, and they pretty much haven't recovered since. So we do have a support line here, but that's right at the lows that they've traded at. They did bounce off that a little bit. They are trading below their 21-day moving average. 50-day is declining. 200-day is declining. We had a death cross. Very little volume over the past probably 3 or 4 weeks, 3 weeks at least. We did have a big volume day on the 11th and the 12th. The RSI is in bearish territory. The PPO is in bearish territory. It tried to get into bullish territory, but couldn't. We had a bearish crossover in bearish territory. We did have a bit of accumulation here, but that is beginning to fade once more. I'm kind of with you. If their business model is threatened, I'm not seeing any hope of really getting back up to these levels anytime soon.
Yeah, and I mean, the evidence is out there that hey, this space it's become super exciting, but at the same time, it's getting some really big competitors with great ideas. Cowork from Anthropic is really good, really good. So UiPath, you're you're in a space where it's like like in baseball, right? You're having a good season, you're winning most of your games, but you have the bad luck of well, the Dodgers are going to win over 100 games and they're loaded, and the Yankees are going to win over 100 games and they're loaded, and the Red Sox are loaded and they're going to win 100 games. And you have the bad luck of your best year happens to occur with everybody else doing awesome. It's kind of like the UiPath situation right now is the field is super strong, and again, it's really hard to compete against open source. If open source can do it, it's going to get so much adoption because it's free. It's easy to use. It's easy to adopt. So Daryl, you have either gone in the witness protection program because it's all blurry, or you'll need to adjust your
Can you
camera.
can you still hear me?
I can.
Okay, my camera just rebooted, so as long as you can
No
still
worries.
hear me, we'll keep going while it's recovering here.
Okay. All right. So we got one more to go here. We got Okta. So Okta does single sign-on for users. So you work at a company and you're like, oh, that company gives me access to 5 different software programs, 10. And it's like back in the day, you'd be logging into 5 or 10 systems and you'd spend a good part of your day logging in, getting into an application. But now Okta, you sign in once and it logs you in across the board, nice in a nice secured way. And they are kind of independent. That's what they do. It is both a strength and a weakness because if that's the only thing you do, it becomes a weakness. And I'll talk about that later. They're probably a good acquisition target. We're dealing with a company that's under pressure overall. Over the 1 year, pressure. 3 months, pressure. Geez. It's a rough ride. I got in and got out of Okta. I realized, you know what, the software space is just getting butchered. And when's it going to end? I'm not sure. I think it's going to be an opportunity, but I got to pick my spots and limit my losses where possible. And I did lose money on Okta. $14 billion market cap. Forward P is 20.76. Analysts think it's discounted. As we look at, this is a smaller company, okay, and it's single product in a space where like Microsoft does single sign-on, and Microsoft's gigantic. They offer thousands of products, and it's not an exaggeration. They offer like so many products, and you have other companies that are gonna, they're bigger. They have a very broad portfolio of products that they offer their customers, and those businesses have an advantage against Okta because they could literally be like, hey, if you buy all this software from me, I'll throw in, single sign on for free. And it's like, whoa, where's that put Okta? It puts them at a huge disadvantage because that's all they sell at Okta. All right. So these guys have good gross margins, good profit, good free cash flow. And the forecast, 36 analysts, let's take a look at their forecast. So their forecast is going to be this steady growth. And I'm also concerned about that. It's like, man, can you grow faster? How can you grow faster? Because you're small, right? They're small. And their PE ratio is dropping. Now, this would be a nice acquisition. You don't know when they're going to be acquired, if they're going to be acquired, but I think another business can acquire them and make themselves better and stronger. Maybe even like a Google would acquire these guys and then offer the Okta single sign-on to all their customers. Or maybe a bigger company that has a broader portfolio has this as part of their offering to their customer. So that's, high level. Okta is, the weaknesses stem from single product line. They're operating with these giants, Microsoft and Google, and these big companies that have these massive portfolios of products. And they are discounted, most definitely discounted stock if you measure it by their profits and their free cash flows. But again, what's going to move the stock higher? It's going to be a tough one to figure out. And for me, I'm just going to sit it out. I took my loss on Okta and I'm going to stay out of it probably. It's just a little too, there's too much of an unknown in this stock for me to play with. So that's my feeling on Okta. What do you think on Okta, Daryl?
Yeah, they're pretty much trading over the last 3 years. They just rotate above and below about that $84 mark or so. We'll go into a year. The 200 days started declining 29th of October, along with all the other software names. The 50-day is declining. They're trading below the 50-day and have been since the 3rd of February, so the last 2 months. The RSI is in bullish territory at the moment, currently sitting at 51. And we're in bearish territory on the PPO, but we did get a bullish crossover. So the black line is up through the red. The distribution has pretty much bottomed out. They're just kind of floating around there and have been since about the 25th of August. Money flow is currently neutral, not quite to bearish territory. Well, they've underperformed the S&P 500 since May of last year. They're underperforming the technology sector since May of last year. Software sector is underperforming, Okta is underperforming the software industry group since the end of May. And the software industry group has been underperforming the SPY since about November of last year. So this looks like a trading candidate. This is not a buy and hold in my opinion, but it could be fun to trade it.
Sounds good, sir. All right, let's catch up with this market and close the show. So it looks like Google, it's gone up. Meta's doing good. The whole semiconductor hardware space is doing great. Micron, look out, get out of the way. This thing's moving. Intel, 10.45. Wow. Incredible. It looks like the software space is doing a little better. Doing a little bit better. Not as bad as it was doing earlier. Energy still coming down. And then industrials are doing their thing. All right. So scale hard. So OpenClaw is not owned by OpenAI. And they're in partnership with OpenAI. They are being supported by OpenAI, but OpenClaw is open source. It was created by this Austrian, and it's not owned by OpenAI. OpenAI can create their own kind of offering of OpenClaw, most definitely, but so can anybody else because it's open source. So I think a lot of businesses are going to probably try to do something with OpenClaw. Although OpenClaw is it's a piece, believe it or not, it's a single computer program. Like you run it on your computer. It's not like you run an enterprise app that 100 people access. No, it's your computer. You tell it what to do, and it goes and does it. So, all right. So let's wrap things up. And I just wanted to go through and let you know what I'm going to be working on over the next couple of days. So first, again, congratulations to our friend, community member, Genetic Smite. I'm working on the access to the stock analysis subscription for you, and I'll get you that information once they send it to me. My blog, I'll keep updating it. I did a kind of a little piece here on ALM, talking about how it's just been a rock star stock and what they do. They're a miner. They're into tungsten and so forth. And I'm also going to update probably this weekend the super investor stuff and just see where these investors are tracking. Be interesting to see who's doing what and how well they're doing and performing. Because this past month has been kind of a hard one. And then for members, paid members, you got valuation tools out there. You got valuation sheets, the value terminal. You have the watch list that we've just been covering, where I'm getting up to like 400 individual stocks that are being handled there. So that's offered there. So that's what I'll be working on this week. I encourage you to consider being a member. It'd be really cool to have you, but no necessity, or it's not a requirement. Come to the streams as often as you can. It'd be great to have you. So that's going on with my channel. What's going on with your channel, Daryl?
So if you're not a member of my channel, you can get to it with this QR code or just use the YouTube handle. So I put out weekly videos. The 2 prior weeks were special editions, really focusing on oil and the VIX, since we had screamed up so high on the VIX, how the US dollar's affecting things, and breadth indicators. But typically what I do in these is just, if there's some charts in my portfolio of holdings that are interesting, I just go through those and explain how they help form any decisions about trades that I might be making. We haven't talked about UNH in a long time. I think everybody's given up on it, but it's kind of setting up quite nicely right now. And I'm expecting to put out a video in the next couple of days on UNH.
Yeah, I'd really appreciate that. All right, so that is it, everybody. Thanks for tuning in. We had a good number of people. Really appreciate it. And it's good to see some new names. Please keep coming back, and thanks for lighting up the chat. We had a lot of chat going on, which is awesome. And keep coming back, keep sharing your ideas, and I hope to see you on the next stream. We're not going to have a stream on Friday morning because markets are closed, and we'll be back in the morning next week. I will be streaming, through other parts of the day. I'm trying to get a new stream schedule going. I'm thinking I'm going to stream during trading hours. I thought that might be interesting, and I'm trying to figure out what would be that right, schedule that I could follow. I'd like to make it kind of a repeatable time slot so that you guys could expect it. But I'm going to test that out, and we really appreciate your feedback on what's the ideal time that I would stream mid trading session. And I'm also going to stream in the evenings, probably tomorrow evening, because I know that there's some community members that are working and they don't have access to a computer, and they usually have to watch maybe the streams in record mode or recording. It'd be cool if they had access to maybe ask their questions live, and maybe having a few streams in the evening would take care of that part of the community. So that's what I intend on doing. And with that, everybody, good luck today. It's a green day. Hopefully you're making money. Your stocks are going higher, and we really appreciate you joining.
Take care, everyone. It's good